SPY, the single ticker that tells you more about the U.S. stock market than any other. When investors think of the market, most of them aren't talking about thousands of individual companies. They're talking about the S&P 500. And SPY, the spdr S&P 500 ETF, is the most traded vehicle for accessing that market. It's the pulse. It's the benchmark. And right now, investors are asking one key question: where does SPY go next? Before we dive into short-term moves, let's establish something very clearly. I am not here to tell you to buy or sell. I don't give out quick trading tips. My role here is to walk through the facts, the sentiment, and the possibilities, so that every investor watching can build their own informed perspective. What you do with that knowledge is entirely your decision. We'll also discuss how the Donald Trump and Vladimir Putin meeting today could impact this stock. Now, with that out of the way, let's talk about SPY. The big picture. Why SPY matters. SPY is more than just another ETF. It's the largest, most liquid ETF in the world. It tracks the S&P 500, meaning that when you look at SPY, you're essentially looking at the performance of Apple, Microsoft, Amazon, Nvidia, Tesla, JP Morgan, Johnson & Johnson, and nearly 500 other giants combined. It's not just one company's earnings, not just one sector's strength. It's the U.S. economy in a single chart. That's why investors watch it so closely. If SPY breaks higher, it signals broad confidence. If it struggles, it tells us that big money is pulling back. And right now, there's no denying that the market environment is complex. Current market environment. As of today, the market is closed, which means there's no flashing green or red candle to dissect in real time. Instead, this gives us the perfect chance to step back and look at the setup heading into the next trading week. Over the last few weeks, SPY has been trading within a fairly tight range. Investors are wrestling with several forces at once: inflation data that has come in softer than expected, Federal Reserve commentary hinting at patience rather than aggression, and earnings season that, so far, has been better than feared, but not spectacular. When the market is closed, you can feel two things happening. Retail traders often relax, stop paying attention, and wait for Monday morning. But institutional investors, they're using this time to position, to hedge, to run scenarios. And if you want to think like the smart money, you need to ask, what are they preparing for? Technicals on SPY. Now, let's talk charts. Technicals are not magic, but they help us understand where other traders might make moves. SPY has been bouncing between key resistance around the recent highs near 560 and support in the 540 zone. Every time it approaches the top of that band, sellers step in. Every time it gets close to support, dip buyers emerge. This tells us one important thing. We are in a consolidation phase. Consolidations frustrate impatient traders. They want big swings, but SPY is moving sideways. For long-term investors, though, consolidations are opportunities. Why? Because they set the stage for the next big move. And here's the thing. The longer SPY consolidates, the stronger that breakout or breakdown tends to be. Volume has been gradually declining over the past sessions, which again suggests investors are waiting for a catalyst. And that catalyst may not come from within the market itself. It may come from external forces. Fundamentals. What's driving SPY? The fundamentals behind SPY are all about the broader U.S. economy. Right now, three themes dominate the conversation. The Federal Reserve. The Fed hasn't raised rates recently, and futures suggest the market is leaning toward no immediate hikes. That provides a degree of comfort. Lower for longer rates mean valuations remain elevated. But the Fed has been careful not to rule out action entirely, which adds caution. Earnings. Most of the big names in the S&P 500 have reported. Big tech has carried the index. Once again, Microsoft and Apple beat expectations, but forward guidance was measured. Nvidia remains the star, but it has also attracted sky-high expectations. Investors are beginning to ask whether too much optimism is priced in. The U.S. consumer. Data shows spending is holding up, though there are cracks forming. Credit card balances are rising, delinquencies ticking higher. For SPY, which relies heavily on consumer-driven companies, that's something to watch. Put this together, and SPY is being pulled in two directions. Optimism about tech and Fed policy supports it. Concerns about the consumer and valuations hold it back. That's why we're stuck in a range. Global forces at play. SPY doesn't move in a vacuum. The US is the biggest market, but global events ripple straight into the ETF. Right now, geopolitical risks are front and center. The US-China trade relationship remains tense. Europe is slowing economically, and energy markets are jittery. When energy prices swing, SPY feels it. When Chinese growth data disappoints, SPY feels it. When global investors grow nervous, they park money in the US, and SPY benefits. This is why, even when the domestic story feels balanced, the international story can tip the scales. The psychology of investors. Here's something not enough people talk about. The psychology of the market. When you look at SPY's chart, you're not just looking at numbers. You're looking at human behavior, fear, greed, patience, and panic. Right now, investor sentiment surveys show cautious optimism. Not extreme greed, not extreme fear. And that's important. Markets tend to top when everyone is euphoric, and they tend to bottom when everyone is terrified. Sitting somewhere in the middle suggests there's no immediate bubble or crash signal flashing. Instead, it's more likely we'll continue grinding within this range until a new force emerges. Risk management and reality. This is the part of the discussion most people want to skip, but it's the most important. SPY is the foundation of many portfolios because it's diversified, but diversification doesn't mean no risk. If SPY falls, almost everything falls with it. That's why it's crucial to remember. Even the strongest ETFs can drop 20, 30, 40% in bear markets. If you're an investor, you need to have a plan. If you're a trader, you need to understand where your stop losses are. Too many people look at SPY's past and assume it will always go up. Long-term, history suggests that's true. But in the short term, nothing is guaranteed. The weekend pause. Since the market is closed today, think of this as the pause before the next chapter. Smart investors don't just trade, they reflect. They ask, what did this week teach us? What might next week bring? They use this time to adjust strategies. And that's exactly what we should be doing now. Because next week could bring volatility. The VIX, often called the fear index, has been relatively calm. But calmness often precedes turbulence. When SPY sits in a narrow band, any new shock can trigger a stronger reaction. Final perspective. So where does that leave us? SPY right now is a coiled spring. It's consolidating, waiting for a catalyst. Fundamentals are mixed, technicals show indecision, and sentiment is neutral. The upcoming Trump-Putin meeting could be the spark that decides the next short-term move. As always, I'll repeat. This is not a recommendation to buy or sell. My analysis is about context, not predictions. The market will do what the market does. Your job as an investor is to stay informed, stay disciplined, and never let headlines alone dictate your decisions. SPY